what happens here over the next few days and really kind of couple of weeks is going to be really important for the market. If the market can continue to build support here and start to get some momentum behind it in terms of the stock market, start to heal up, get past some of this negativity that's been floating around the markets, there is potential here for this market to go ahead and rally some more going into the summer. Let's talk a little bit about what you need to know before the bell this morning. Of course, yesterday was the Fed announcement, and again, we'll get more into the actual details of that, but it was pretty much a nothing burger. Nobody expected a Fed rate cut, so it's exactly what they did. They didn't cut rates, and they said, hey, we're going to sit here and wait on the data. It's quite interesting that this time last year, they're cutting rates by 50 basis points with employment stable and, the economy doing okay and inflation coming down. And yesterday we have inflation coming down, employment stable, the economy's doing okay, and no rate cuts. So, what their thesis is for rate cuts or not rate cuts is kind of an anomaly now. I just don't know what they're thinking. So we'll kind of see what happens. But the market responded okay to that. Initially kind of sold off with kind of disappointment about, the lack of a rate cut. But right after that, the markets rallied back into positive territory, finished the day on the upside. So a couple pieces of really good news here for the bulls. We are now bouncing off of support at the 50-day moving average. So we have now tested the 50-day moving average twice over the last couple of days, held that. The market's expected to be up about 1% at the open this morning. So we're going to get a nice little bounce off this 50-day moving average. So we're building some support at that support level right now of that 50-day. At the same time, this 20-day moving average is very rapidly catching up with the 50-day. So we're about to have a double layer of support sitting right below where stocks are trading right now. And if you take a look at systemic traders, the CTAs, the computerized trading algorithms, you take a look at kind of professional managers, they are not grossly long exposure right now. They are either underweight equity exposure or neutral equity exposure, which gives a lot of buying power to the markets if we start to get some more good news here. And if stocks start to rally, that's going to start to suck more money back from defensive positioning back into the market itself. But importantly, what we've got here is, though, you got this kind of support building right around the 50-day, the 20 days catching up here. And we're also building a really good support line along those previous bottoms. So we had that whole bottoming process previously just before the Liberation Day announcements. And then, of course, we just broke down sharply from that when Trump kind of surprised the whole world with the announcement that he made. But prior to that, the market was consolidating, expecting those 10% tariffs to come along. And if that had happened, the markets probably would have been okay. Of course, as the Liberation Day announcement was not that. We had that big sell-off. Since then, the market's recovered on this kind of news. We've been building this nice uptrend line. And so what's happening here is that we've gone back into this consolidation range. So we're building a very nice consolidation range for the markets, and that's going to build a kind of a key level of support here. So the good news for the bulls is if markets can hold this and rally, we're very, very close now to starting, and today's action will take us right up towards the 200-day moving average. So if we can get above that resistance level, that's going to kind of clear the way for the markets to rally higher here. Now, a failure at this point, if we do take out this kind of this building line of support that we have, we're going to have we'll have a decent retracement back. So again, what happens here over the next few days and really kind of couple of weeks is going to be really important for the market. If the market can continue to build support here and start to get some momentum behind it, in terms of the stock market, start to heal up, get past some of this negativity that's been floating around the markets, there is potential here for this market to go ahead and rally some more going into the summer. But if we don't, there's some risk here that we're going to have another bit of a decline. But again, we've got to take out this kind of support line that's getting built here. And again, so this will be something to kind of watch. So again, nothing to be overly concerned about right now, but I would still be a little bit reticent about getting overly aggressive right now until we start to really kind of take out this kind of overhead resistance. And then once you do that, and we take out that resistance, it'll be kind of an easier to add equity risk to your portfolio at that point, because you'll have a lot of that risk of downside corrective action starting to move behind you a bit. But right now we're kind of still stuck in this trading range. So just be mindful of that right now. Kind of manage your risk exposure here. until the market kind of decides what it wants to do next. But overall, from a bullish standpoint, the market is healing up. It's starting to look a lot better. Breadth is improving, so that's helping a lot of this kind of market to settle down, get past some of that recent volatility we've had. But that's what you need to know before the bell this morning.